Hey, good afternoon. Trader Tim here from EminiMind, and we're doing a trade recap video for September 23rd, 2021. Today was essentially the first day here after the FOMC meeting announcement, and I would say things leading up into Wednesday's announcement were a lot better than we've seen in the past. So usually today kind of kicks off the fall better trading opportunities, but got started a little bit early. Friday I had a nice short runner, and then Tuesday of this week I wanted to talk about a trade from the high tick at highs, and then a couple of trades that I took today. You can see on the daily chart here, we have a full halfway back short that kind of lines up with the underside of this trend line, which we'd been riding or at least bouncing off of. We've been kind of hugging a lot higher than this trend line, but we've been at least bouncing off this steeper trend line here for the last couple of months and pretty much all the way through the summer. And so now that we're up against this 61.8 and against this trend line, it will be crucial for us to be able to get a close outside of the 61.8 and then maybe punch through this trend line and close above, really getting a close above the sell off day here. So that would be like a 44.60 and a quarter. But being so close to this trend line here, it wouldn't surprise me if we do go through the 61.8 a little bit more and then kind of sell off intraday. So maybe get sort of inverted hammer, or tomorrow being Friday, could see just a little smaller body candle up here that kind of hangs out at the 61.8, and then maybe we roll over into next week. And that could look something like a pullback to the 50% retracement long. And then you get in the situation where you're kind of between the two 50%. We could also make our way all the way back down to the lows here, 4,300, and then possibly get a double bottom, or just like you might see up here, an inverted hammer with a tail sticking up. If you come down to lows, you could dip below the tail down here and then get a hammer with a tail sticking down. And from an intraday perspective, it really doesn't matter that much, but it is helpful to kind of get a context of where are we at in the trend. At this point, we're well off of lows, and we're also below this up trend line. So speaking of off of lows, both Tuesday and Wednesday had opportunities to get long above the first 15-minute bar. We gapped up at lows. Both of those days, I would consider Tuesday and Wednesday kind of gapping up at this low candle from Monday. So those were two gap up at lows, opportunities to either add to long-term buy and hold positions or putting on new long swing trades. Those are areas where I like to do that. And then you can also use that signal, that first 15-minute bar, like even in today's case. So yesterday is a 15-minute chart. Yesterday, when we broke above the first 15-minute candle, you could use that as a signal for, okay, we're looking at a strong likelihood of a gap and go day. Let me look for longs only and not try to take shorts. Today, same thing. We gapped up. We broke above the first 15-minute candle, and so you can use that as a signal to say, well, I'm going to pass on shorts. I'm just going to take longs, and I'm going to be okay, taking a long what might feel like at highs around the first 15 minutes, but that's pretty early in the day. So if it is going to be a strong trend day, we're probably going to move a lot higher from there. And then you can back that up with the breadth and the advanced decline line. We talked a little bit about that in Monday's video. So if we go drill down a little bit further to, well, let's go back to Tuesday first, and then we'll come to today. Tuesday, I marked it here before I started the video. We had a high tick at the 13 or 18-minute mark into the day, a high nicey tick, and a high price printed at the same time. And we did gap up. This was the day following the bigger sell-off on Monday. And so being the day after that, there was still a lot more fear and volatility present. And so the high tick lined up with high price, and we set up in the short. There really wasn't another opposing long. Like if you drew this long here, you broke through the 61.8. The next long was all the way down here, and we didn't touch that. So we had plenty of room to run. Even if we only came to this halfway back long, you're catching 81 down to 76. So shorting at 81, traded in a little bit, but worked out just fine. Rolled over, just trailing the next 61.8 here, rounding up and adding 2 ticks. And then what I did, since we started falling off pretty quickly here, instead of drawing the next retracement like this, which would have had my stop up around, we'll call it 76, and price was down here at 67, 9 points away, I just came in and trailed each candle's high as best I could. You start to get down here and they get going kind of fast. And I think it was, what did I use? 72.75 is where I ended up getting out. So like right around, actually, wait a minute here. Is that right? 72.75. Why doesn't that line up here? Oh, no, it was 68.75. So down here, right above this this candle here. So just trailed each candle to kind of get to lock in a little bit more profit versus saying, okay, well, we're down here at 68, and I'm going to let it come all the way back up 7, 8, 9 points before getting it to roll over again. So it did end up rolling over a little bit more, but the only way to stay in that is to let your stop be further away. And if you're going to do that, I would suggest then trailing the 61.8 every time, because otherwise you will end up giving it back on some trades where it comes 9 points back, and then the times that it does end up rolling over, like this one here, you need that to offset those times where it doesn't, and you give back more. So if you're going to be a little more conservative with your stop and keep it a little bit higher for your shorts, just try to do that every time, or you're going to end up sort of changing on the fly, and you might do yourself a disservice and end up, even if 1 or 2 trades work out, if you're constantly giving back an extra 6 points on trades that don't end up rolling over a second time like this, the 6 points, 6 points, 6 points, they start to add up, and then they eat into that one time that it did something like this and rolled over and dove off pretty good. So let's go to today's trades, plural. Didn't take anything yesterday. I typically don't on the FOMC meeting mornings. Over here, so the morning, strong breath, gap up, moved above the first 15-minute bar. Good sign of a gap and go day. First one was a long setup here, which would have been 20 minutes after the bell. 44.27, 70. I ended up getting a 75 by mistake because I had my anchor drawn like that, and so I got in a tick higher, but the actual entry should have been a 27.50. I just kind of got in a tick higher. So then this one, I drew the next retracement like this and got taken out for an extra point, and then the 3-point first target. So unfortunately, this one came all the way back and kind of retested the 50%. So again, the only way to stay in something like this is to leave your stop at the -2. So your stop's down here at, we'll say, 25 or 26.50, and price is up here at 34. That's getting to be a lot of unrealized gain to give up just to see it go another few points higher. And so, you kind of have to try to keep things as consistent as possible with your exit approach so that if you are going to be giving it all back, you can't feel bad, um, because if one time or 1 out of 10 times or 2 out of 10 times that you do catch another runner, it needs to make up for all of those additional losses. So that was the first one, and then we kind of got a little bit sideways up here. The next one was a 7:15, so 45 minutes after the bell. I took this as a long at 37.75, and we traded through, and I got stopped out. And then we did make a new high, but then we just kind of moved sideways along that zone there before moving a little bit higher and then rolling over once again. So those were my two for this morning. I did add more to my longer term position yesterday or Tuesday at the gap up, and so use that as an opportunity to buy the dip. I didn't go full gas in, just put a little bit more in because I do think there's a strong possibility for us to go lower and likely come down to this shallower trend line that I have down here. It might be a little bit, a couple more weeks before we do that, at which point this trend line will continue to rise, and it might end up, that pullback to the trend line could be all the way up at 4,300 at that point. If enough time goes by, the trend line will extend higher. So those were the trades for today. Next week we'll be back on the usual Tuesday morning live trading session, so you can tune into that over at eminimind.com/VIP. Thanks everyone, and have a good rest of your week.